What's up, degenerates, and welcome back to another video. Today I'm going to be showing you a breakdown of price behavior in the recent weeks and what I think is going to happen in this upcoming week. Obviously, we do have CPI data coming out on Thursday, so that will move the markets in either direction depending on the outcome of that. But I want to give you a sense of how I would look at price, especially in the recent week. A lot of people find this difficult to trade. Obviously, if you're trying to swing longer dated contracts, you're just going to get chopped up in this. But if you're playing short dated contracts, it's actually quite simple to trade this and you can make a good amount of money doing it. So I hope you learned something in this video. Make sure you hit that subscribe button below. Let's get right into it. So as you can see here, we did break down below this key level right here at 389.63, which I show here with the red dotted line. Once we broke below that, we did enter into this new range. And as you can see here, around this 378.70 level, this area has acted as support. And so you could always play short dated call contracts right around this level. You can see here that we did open above that level here on Tuesday on December. We pushed higher. Didn't really quite get much out of that day, but we did push to the upside of this range, which also created a gap right here around this 387 level. So you could have continued to play that area as resistance, play this to the downside, and then play that level, play this 378.70 level as a level to actually go long. And then of course at the bottom of this range, right around 376.72, that's really the key level for bears to break through. We couldn't quite get through that level, and so as long as that level acted as support, that was the best level to go long. And so you see here multiple times we did push the upside every time we held that level. And then even here on Friday, we did come down, wick test that level, and then push to the upside. Now that we did finally break above that minor resistance level around 387, which was that previous gap that acted as resistance, we are now headed back to this key level at 389.63. So this is the most important level for this upcoming week. If this level holds as resistance, then I do expect us to push back down. This would be a good level to take some profit, but most likely this level would probably break down and head towards that 379 level again. So you can make a good profit swinging some short dated put contracts on the S&P 500 if that 389.63 level holds as resistance. So that's something to look for. You can play weekly, daily, 2 weeks. Most likely short dated contracts is probably what you'd want to play here just because you're scalping in and out of positions quickly. Now, if this key level now flips as support, so say price moves to the upside, then that level is going to act as support. And the reason why I know this is because if you look back historically, so history, price, how it behaves historically is how you can get an idea of how it will behave in the future. So if we flip this key level as support, price likes to behave quickly. So we push to the upside, we push to the upside. You can see it here historically. We continue to push to the upside every time that level has flipped as support. You can see here it even came back down, retested that level. If you would have went long, you would make a good amount of money pushing to the upside. Now gaps are also important. So if we break above this level, it holds as support. You might not want to enter right away because this 393 level has also been more of like a pass go, do not collect $200 kind of thing. So if we do break below 393, your contracts are sitting pretty. We're going to probably go up and try to fill this level at 400. So this would be the first level that I'd be looking to take profit if I went long at 389.63. If that level here fills up, that could be a gap fill reversal. So every time price fills gaps, it usually will act as a resistance, or if there was a gap to the downside, it would act as support and push to the upside. So these are key levels that you want to be looking at for this upcoming week. Now, if this level, if we cross above this level, that's a pretty good sign that you can continue to hold these contracts. Price likes to move quickly. Price might move all the way up to 407. This is a good level to play short. If price moves up here, this is a good level to play short. If you get some candle confirmations, which usually are as a series of wicks, right? So You can kind of see it here. Price has trouble pushing over there, whether you're on the hourly chart or the daily chart. You can see that there's confirmation there that price wants to reject. So often at times, price rejects around this 407 level. If that breaks, then obviously the next key level right here is at 415, which is a more important level than 407. So 407, you can play some short dated contracts. You can even look at certain stocks in the S&P 500. If you want to play to the downside, you want to time resistance levels not only with a specific stock, but also the index. So that's also a good tip to use when you're trying to play a specific stock, whether it's like Apple, for instance, right? Which leads me into my next thing. So if we're looking at Apple, so those are the key levels: 388, 389, 393 is kind of okay. I can hold on to these contracts. If 389 breaks, you stop out. If if you're playing to the upside, and then obviously depending where price is, you can always play to the downside if it breaks below and you get confirmation all the way back down to 379. So that's what I'm looking for the upcoming week. And then obviously CPI, really anything can happen. Price could be above here. CPI comes in hot, price will sell. So that's something to be wary of. You probably want to de-risk and not be holding any contracts until after CPI actually comes out, so then you can play the key levels again. But as for key levels, and you're trying to time something specific with Apple, for instance, so you can see here the lows from 2022 in June were right around this 129 level. We did actually break below that, but even on like a moving average basis on the daily chart, we are way overextended to the downside, and we've been bouncing, trying to get back up over this 129 level. Now, every time we have pushed over this 129 level, you can see how price behaves. The last time we had this huge bull run to the upside. I don't know if that's going to play out this time. We did have a really strong push and then an equal and opposite reaction before. So it's pretty unlikely, but I do think that this is a good level to go long. So if we break over 129, this area right now, we've just tested it. If we continue to push higher, you can wait till 132 confirmation or enter here and use that as a stop loss if we break back below it. But if you're playing call contracts, it's a really good area to play long and then see if we get back up to this 132 level. Now, if we break over 132, you do see that price likes to move quickly. Price likes to move quickly. Price likes to move quickly. Maybe even potentially all the way up to 150. Obviously, you want to be taking profit at key levels earlier than that, or at 134, 135, and then again at 138. And looking to see if price is rejecting at those levels or, breaking over it, finding support, and then you can continue to hold those contracts. But you always want to be scaling out into strength if you are playing long or if you're playing short to the downside. Now, another cool thing is if Apple is breaking above 132.68, but then you go to SPY, right? Apple's the largest stock in the S&P 500. Right? If SPY is, so if Apple is breaking above 129 and headed towards this 132, then it's likely that SPY is now above 389.63 and headed towards this 393. Now, if SPY is breaking over 393, but Apple is still right around 132, just quite below it, then you got to kind of get an idea is Apple going to follow SPY, and I can continue to hold my contracts, right? If you entered here on Apple, SPY's already above that yellow line, right? So now it's most likely going to head up to fill that gap on the hourly chart. I can continue to hold my Apple contracts because I now have an indication that the market wants to push higher. I can continue to hold, and Apple will likely also cross that yellow line and head for this gap fill that it also has right around 135, 136. So that's another thing to look for when not only looking at the index, but also a specific stock play, especially if it's a large cap stock that's heavily correlated to the overall index. But even on certain growth names, right? So if I'm looking at tech came back up and didn't quite get above, SPY seems to be a little bit above the previous range, but not quite over that key level. If I look at tech, or the NASDAQ, you can see here that it didn't quite get over the recent range that it's been trading in. It's still trying to get up to fill that gap around 274. So how price moves not only in one index, but can also influence another, and then also trying to time that with the overall market. Like, for instance, just one last thing to leave you with, if tech was pushing well below its support line here around 258, if we zoom out and say it broke these lows and was headed down to, you know, this previous resistance level that turned into support once it broke above that, if it was headed down to this level here, then I was looking at, say, Zoom. So Zoom is trading almost at its all-time lows. That would be a good signal if tech broke down below, Zoom was headed towards its all-time lows, and it was finding support here at 240, 239 on tech. Then that's a great position to go long Zoom, because Zoom has a high beta stock. It moves more than the overall market. If you go long Zoom and you know that the NASDAQ is at a very strong support key level and it's holding it as support, then Zoom is going to benefit more to the upside than, say, a Microsoft, for instance, because it's a lower beta stock. It's not going to move as much on a percent basis. And so Zoom would actually be the better position even over something like a Microsoft, because you know that Zoom is likely to move, 30% to Microsoft's only 10%. Now, premiums would like to shift around on this, obviously. So you got a lot more detail goes into this, a lot more due diligence. But if you're playing shares, for instance, it's almost like a no-brainer to swing shares on a high beta stock versus something like an Apple or a Microsoft. Even though technically they're going to be safer, it might not be the best risk to return ratio. So I hope you learned a lot in this video. I'm going to keep pumping out some content. We got a lot going on. Make sure you guys join the Discord. It's a free community of other stock traders. You can get a lot of good ideas in there. We also do offer a free trial if you want to go on to like the premium side of things. We got a lot of really smart people in there constantly trading, sharing ideas. Just let me know if you have any questions in the comments below, or hit me in the Discord. Me and my co-founder are constantly in there 24/7 talking to everybody. So yeah, that's it. Hope you enjoy your weekend, and I'll see you in the next video. Peace.